Good morning, friends. Welcome to SBI Securities Morning Podcast. In today's podcast, we'll be discussing what to expect in Nifty and Bank Nifty from here on, as well as the key levels for both the indices. We'll also be discussing on the key sectors and stocks in focus in trade today, as well as the next few trading sessions. First up, coming to the update regarding our markets in the week gone by. So during the last week, the benchmark index Nifty reached a new milestone, surpassing the mark of 25,000 for the first time, making a historic achievement in the market. However, on Thursday, the US markets experienced a sharp sell-off due to disappointing economic data, which overshadowed optimism about a potential interest rate cut by the Federal Reserve. This led to profit booking in our markets as well as the rest of the Asian indices. As a result, the benchmark index Nifty tumbled by over 360 points, ending the week at levels of 24,717 with a loss of 0.47%, breaking an 8-week winning streak. Along with this decline, the Nifty retraced almost 38.2% of the Fibonacci retracement level, 24,700 of its prior upward rally, that is 24,074 towards 25,078 levels. Additionally, it slipped below its 5 and 8-day EMA level. The internal strength of the market has weakened significantly. If we see, only 62% of the indexed constituents are trading above their 20-day EMA level presently. Further, if we see, a negative divergence was identified on the daily time frame of the 14-period RSI. A negative divergence occurs when the price makes a higher high while the RSI forms a higher low. This suggests that traders should avoid building over leveraged positions and chasing price. Coming to the current market levels, so if you see, talking about levels, considering the gap down opening for our markets, the zone of 24,250 24,200 will act as the immediate support for the index, as the prior swing low is placed in that region. If the index slips below the levels of 24,200, then the next support is placed at 24,050. On the upside, if we see, the resistance has shifted lower in the zone of 24,750 24,700 levels. Coming to the outlook for Bank Nifty, so the lack of direction is clearly visible on the daily charts of Bank Nifty. During the week, it has oscillated in the zone of 52,340 and 51,087 levels and mostly formed indecisive candles. The momentum indicators and oscillators are also portraying the similar picture. The daily RSI is in a sideways zone since last 11 trading sessions as per the RSI range shift rules. The trend strength indicator ADX is currently quoting at 14.54 level and it is in a falling mode. This clearly shows lack of direction on either side. We believe this mainly due to the mixed trend from the large cap banking stocks. So we have HDFC Bank, which has formed a strong base near 1590 level and resumed its upward journey. It is currently trading above its 20-day EMA level, while ICICI Bank is trading below its 20-day EMA level. Axis Bank is showing notable weakness as it is trading below its 20, 50 and 100-day EMA levels as well. Coming to the levels ahead for Bank Nifty, so the zone of 50,600 50,500 will act as the immediate support for the index, as the prior swing low is placed in that region. Any sustainable move below the levels of 50,500 will lead to further correction up to the levels of 49,900 in the short term, while on the upside, the zone of 51,300 51,400 will act as the immediate hurdle. Coming to India VIX, so the volatility index India VIX has shown a notable uptick as it is ending the week at 14.32 level with a gain of nearly 17%. Along with this upside, it has surged above its 20-day EMA level. So going ahead, the zone of 14.815 will act as the immediate hurdle for the index. Any sustainable move above the levels of 15 will lead to a sharp upside rally up to the mark of 16.2 in the short term. Coming to the sectors to watch out for, so technically we have Nifty Pharma and Nifty Healthcare that is likely to outperform in the short term, while on the flip side we have Nifty Realty, Nifty PSU, Nifty Metal which is likely to underperform in the short term. So that's a wrap of today's edition. Thank you for regularly listening to our podcast. Do tune in tomorrow for more market updates and insights. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.